Hey there, welcome aboard. It's Walter here from Naked Forex. This one. Anyway, we're not going to talk about the book. And actually, I don't really care about the book because everything I said in the book had to do with systems, or most of it, except for a couple of chapters. And what we want to talk about here is something completely different. If you're finding that your consistency has been a little bit difficult to get, I think one thing that I've noticed in my trading that's been wrong is I looked at the wrong kind of consistency. And I'll share with you what I'm talking about. A lot of times when traders ask, it's one of the big questions they ask me, say, how do I become more consistent? I'll tell you this, which, by the way, before I forget, you can go to nakedtradingclass.com and find 3 consistent ways to build an account quickly, and that free class there. It's on demand. You can watch it as soon as you land on the page. So what I'm going to do here is share with you a way to look at your trading slightly differently. So instead of focusing on one form of consistency, you focus on another one. And I'll show you why this is so important. And by the way, this beautiful artwork back here in the background here, that is my daughter's artwork. And it is beautiful, as she will let you know. So let's talk about what's going on here. Now, a lot of traders, what they do is they focus in on this. When they're talking about consistency, they're actually concerned with what is the win rate. So when they say, I want to be more consistent, that's because they want to improve their win rate. Here's the interesting thing. I used to trade around 70% win rate. Let's say that, let's say that it was 68 or whatever, and I didn't have any break-even trades. I actually did, but let's just say that I didn't. So then I would have 32% loss rate. But my reward to risk ratio was right around 1. Okay. So, oops, I shouldn't have done that. I'm making a mistake. My reward risk ratio is around 1. So I'm risking $1,000 to make $1,000, right? So that is a 1-to-1 reward to risk ratio. And this should be a negative number where it says loss. So I'll put the link below this video for this spreadsheet. Remember, if you want to download it as an Excel spreadsheet, you can do that, or save it to your own Google Sheets or your Google Drive. You don't have to request any permissions to do that. Okay, so expectancy is $360. And the way that you interpret this is I'm saying that, hey, I've got a 68% of the time I win, 32% of the time I lose, and I'm risking $1,000 to make $1,000. Now, that means for every $1,000 I stuff through this system, I'm expected to make about $360, which is pretty good. But here's where this gets interesting. And the reason why I traded this way, so I traded like daily kangaroo tails, daily big shadows, all of those sorts of things that you've probably read about if you follow the Naked Forex Bet, if you've read the book. These are the things that I was doing, right? Here's what I'm doing now, completely different style of trading. Instead of focusing in on here on the win rate and spending so much time trying to get this right, I've decided that because of broker slippage, because execution has to be so spot on to get that right, I decided to instead focus more on my win size. So now, if I go for 3-to-1, which I do in many of my trades, and so risking $1,000 to make $3,000, what happens is my win rate falls down. Okay, it's not quite what it was. It's definitely not quite what it was. However, the interesting thing about this is that it actually makes more money. So if you have a 41% win rate, 59% losing rate, it's difficult psychologically to deal with, but you actually make more money. Let me share with you another one. I have a friend. He's in London. He trades an 8% win rate. Okay, so 92% of the time he's losing. He's automated it, and his winners make 20 times what his losers make. Okay, oops. I make the mistake of you shouldn't mess with that formula there. So what that means is he's risking $1,000, and he's probably risking less than that to make 20,000, or we'll just say risking $100 or £100 more likely to make £2,000. And that's the same thing. So for every $100 he feeds through the strategy, he's expected to make $68. So for every $1,000 he feeds through the strategy, it's expected to pump out $680. And so this is what's important here, and this is really critical. There are we know that in trading there are three things you can do to improve your trading or to get your trading right. There's always if there's a bottleneck in your trading, if there's a challenge, there's always going to be one of these three things. Number one, the strategy you're trading does not make money, or you do not believe in it. Either one is just as deadly. So if you copy someone else's strategy, the reason why that often doesn't work is because it doesn't make sense to you, right? You can go ahead, and there's tons of strategies freely available online or any of the ones in my book. But if you try and trade one that doesn't make sense, guess what? You will quit. You will quit trading. You will quit that. You'll throw it away, and you'll start trading something else. It's called the cycle of doom. It's actually in the book here. I don't know where it is, some page. But the point is, cycle of doom is the most difficult thing for us to get through as traders. We end up in the cycle of doom because we're not focusing on matching what we believe to our trading system. So that's number one. Number two is you have to have your risk management rules correctly. And in the class, at Naked Trading class, you will see how to use risk to achieve your goals. That's the most important thing. Most people don't look at it that way. They think of the reward and they forget about the risk. Some of your goals are to avoid a certain drawdown, whether they are stated or not. You will become confronted with these goals when you hit a really serious drawdown and you consider quitting. We've all been there, right? So it's not very fun when you're thinking, oh, this isn't working more. Do I keep going? And then finally, the last thing is psychology. So what we talked about here is risk and reward and psychology. So when you get the risk right, like my friend here has with his 20-to-1 reward risk ratio, he's automated it so he doesn't have to sit through the 92% losses and the occasional 8% wins. He knows that if he gets his risk right, he's going to make money. And he's got his psychology right because he's no longer concerned about winning. Winning is no longer a thing for him. He knows he wants to be consistent at making money. And that's really the difference here. Instead of focusing on win rate and trying to make it so I'm consistent winner, instead we work on our mindset and say, can I deal with the losers? And that's called psychological resiliency. That's what we call that in psychology. The ability to keep going even though it's tough. And the way you do that is you kind of change the way things look, slightly change the way you view the world. And you get a bump of resiliency when you do that. And it's key for traders. If traders don't have, I was just talking to a trader last night, and he agreed. He trades with his son. He's a very good trader. He's been trading for years and years, profitable. And he even said last night, I think I'm going to quit. I'm looking at retiring now and blah, blah, blah. And I said, don't you agree that one of the key things that you have to use as a trader is the psychological resiliency to push through drawdowns? And he said, yeah, that's it. So that's something that if you go to Naked Trading class, you can go through the free class. And if you want to join us, you'll see there's another class you can join. And that there's a whole week all about resiliency, videos and videos about building up psychological resiliency. The only way you keep trading through the difficult times is when you have that resiliency and I'm going to push through this challenge. I'll get to the other side. Because the fact is, if you're trading a low win rate strategy, most of the time you're going to be in drawdown. So you might as well learn how to deal with it. That's it. All right. Thanks so much for your time. We'll see you in the next video. I hope you have a good one. Bye.